Welcome back, everybody, to Be the Trader. Today, I have a very special guest. If you haven't listened to his first episode where we interviewed Phil Goedeker and went into full details of what got him to where he is today, make sure to go back and listen to that, because today we're going to mainly focus on a specific topic. So, Phil, welcome back to the show, my man. It's always a pleasure talking to you.
Alex, how you doing? Happy to be here again.
Oh, it's good, man. I love it. I love talking to you. I love that you're here. And to let the audience know, today we're going to be talking about really just the idea of eliminating habits and just elimination, really.
Sure.
And so, if you kind of want to start it off, or I can, it's up to you.
Yeah, I think one of the most difficult things for a trader to do is there's a couple things. What are they really good at, and what are we really bad at? And I've talked about it before, but analyzing your trades, studying your trades, focusing on what did I do really good this week? What did I do really good last month? What did I do really well last year? And I think the more you can study your trades, the more you can figure out your habits. Because again, as traders, we play so many trades every day, every week, every month. And at the end of the year, we have thousands, if not tens of thousands. And there's so many of these trades that I think we probably place all the time that we don't really realize are, not winning trades, whether they're placed at the wrong time of the day, whether they're placed, we don't study the volume, we don't study the float, we don't study the news, we don't study so many other parameters. So I think one of the best ways to move forward as a trader is to know what you're doing well. And then on the flip side, know what you're doing poorly and trying to improve on that. Because I think for me, the way that I originally took my trading to the next level and my income to the next level, and when my income first doubled several years ago, it wasn't because I stepped up my game or increased my size on my winning trades. It was simply cutting out so many things that I was doing wrong. And it took me several years to realize why am I doing this? Why am I placing all these trades during slow times, placing all these 50-50 trades, taking on too much size on, mediocre setups, etc. So whatever traders can do to eliminate mistakes, not eliminate them, just cut them down, minimize mistakes, it will drastically help their trading and their income.
Hey guys, I just want to take a moment to share with you some awesome news. I just started a newsletter, and you're probably like, what's so awesome about that? Well, it's not your typical newsletter, because I'm going to give back to you, the people who subscribe to the newsletter. Number one, you will be getting updates on my YouTube exclusive videos, the podcast episodes, and articles and blogs all about trading. But how is it different? I'm going to give back to you guys. I'm going to select randomly different subscribers who are in the newsletter and give them either the opportunity to have a one-on-one call with me. Maybe I'll give them a free trading book, one of my favorite trading books, just to name one, Trading in the Zone. And also, and not only, because there's many, many more ideas that we're going to be doing and implementing. But another idea is maybe win the Billions box set. This popular show on Showtime, Billions. If you don't know about it, definitely look it up, because it should be everyone's favorite show if you're a trader. At least it's one of my favorites. So I want to give back to you guys, because you guys mean a lot to me. And I just don't want to only provide content, but I want to say thank you, right? And I provide content by saying thank you, but I also want to say thank you by giving back. So thank you guys, and you guys take care. Yeah, and when you say like trying to figure out what you're not doing well at, and trying to minimize that, because I think you're right. Eliminating could be seen as negative, because if you're not, because to be perfect, right? If you're not eliminating it, then you might get upset when you kind of slip into a bad habit or whatever it may be. But how did you go about, or how would you suggest someone goes about the idea of really understanding what is creating a bad habit, or what is the reason for a loss, or how should they go back and look at that data or whatever?
So really what I did is I just grouped all of my trades together, and I basically took all of my winning trades, put them in one category, took all of my losing trades, put them in another category, and slowly started to pick at them. And I realized, okay, 80% or so of my wins are coming off these huge, big wins in stock. Something like we talked about last time, like GNUS, when it got so overbought and then it had so much downside. That would be a big, big win for me. And basically I took all these big winning trades and all these big losing trades. And for the winning trades, it was easy to see. This is where I'm making money. And on the losing trades, I had tons of 50-50 trades that, are washes, didn't really mean anything. But then I took all the big losing trades and I tried to figure out, okay, what am I doing wrong on these? Did I enter stock too early? Did I get stopped out too early? Was it a setup I just shouldn't have been? Was my position size, incorrect? What was it? And basically studying that data over and over again to try to figure out, okay, but where are the mistakes? It just comes from, for me, it was analyzing the data. I mean, that's really what it came down to, analyzing the data. Turn my speakers off there. And trying to hone in on what I can do to either eliminate them or just improve them, and if the losses were taking on sometimes too much size on a stock that only has a 1 million share float, okay, I can't short 50,000 shares of this stock, because if it goes against me, it's going to go against me and, hard and fast, and I don't want to take a big loss. So maybe that's a setup I need to cut my position size down on. Again, for me personally, a lot of the trades were just simply going long. I'm not a good long bias trader. And so for me, it was just eliminating a lot of these 50-50 setups or setups that just weren't in my niche. And I think, we've talked about it before, but every trader out there, most traders have different strengths and different weaknesses. And what is a strength for me might be a weakness for somebody else. And what is a plus setup for me might not be an A plus setup for someone else. So it's honing in on what you do well and your weaknesses and just trying to eliminate them.
So basically you just went back and looked at, for you, your biggest losses, and really honed in on those. And for you at that time, it was mainly the longs. Like the longs were like probably your biggest losses at that time. So it was kind of easy for you to just say, I'm not longing. Is that pretty much
right? Yeah, absolutely. And it started out analyzing the biggest losses, the top, 50 biggest losses. And then it's like, okay, I've learned that. Then let me get into my next 50, 100, 200 losses, on the year. After, you place in all these trades and then try to get to the next step. Okay, I'm not great at going long. Or is it I can go long, but I shouldn't try to hold a stock all day, because sometimes, right now we have algorithms trying to jam stocks. And if an algo takes a stock from 2 to 3, but we have it in our head, hey, last week it took one from 2 to 10, I'm going to hold all day. Well, that's kind of being stubborn. So maybe it's not even longing, but it's don't be stubborn to go for the home run. Take a base hit, right? If I can make a little bit of money going long, well, I'm happy about that. So it's just trying to change up your game plan and improve on your mistakes overall.
Now, what about the habits that some people have? Like, for instance, for me, like I did something similar. I just realized I suck at longing. So I just got rid of longing, and that just made me profitable. It didn't make me like a star, right? It just made me profitable. Right. And I wasn't red at the end of the day or the end of the month. But then I had to start analyzing other things, like my habits, like habits of maybe jumping right back in right after a loss, like the habit of like you lose, jump right back in. Like, were there any habits that you had personally that were something like that? And if there was there anything you did, if this happened or whatever kind of rule or something you implemented to help you get rid of that habit?
That's a hard habit to break, of trying to recoup your losses, right? And that's how I think that might be one of the worst habits out there, and unfortunately is probably the cause of a lot of traders blowing up, is trying to recoup that loss. Oh, I lost whatever it is, 5 grand, 10 grand. Let me just place a trade and try to recoup it. Well, then you're down double, then you're down triple, and that's what we see can lead to catastrophic losses. So that becomes a real mental game that you almost try to force yourself to walk away. I know some traders personally put on, a stop loss from their broker. If they lose over this much for the day, they're out. That way they know if they lose over, whatever it is, 10% of their account or 20% of the account, they're restricted from trading that day and they walk away. I don't like to put that on myself, because I'd like to know that I can, or think that I can, mentally handle that myself and get rid of it. But if that is something that works for someone who's a trader, that's great. I have definitely faced that where, you know, you think a stock is ready to fall and you hammer it short, and guess what? It holds and breaks out to new highs. Now you take a loss. And what do? You have to have the discipline, and you have to have the patience to know when it's right and when it's safe to get back in a stock. But it's definitely tricky. It definitely takes, time and patience and mental toughness more than anything else, because you want your money back. If you lose money, you want it back.
Yeah,
And
absolutely.
you don't want to wait till tomorrow morning to find out the stock gap down 20% and the trade is over. So,
or during slow months where there's like no trades.
absolutely. Kind of like what we're in right now in mid-September, when the market gets slow. That's when, I think it kind of separates some people that are really mentally tough to others that maybe are not, that are kind of just beginning, that say, hey, I need this trade. I need to make some money. I need to be profitable, whatever it is. And that is, it's one of the dangers of trading. There's no doubt about it.
For sure. I think, let me know what you think about this, but I think one of the ways for a lot of people to be able to like get more focused on not worrying about making it back. Like, and you and I talked before this show that, I slipped into that today where I lost and I waited like 2 hours. So it wasn't the same habit, but like I waited 2 hours, then get back in because I thought I saw a signal. But back in the day, I would do the exact opposite. I would take a loss and then, oh, look, it kind of looks like it faked me out and jump back in. Right. And so for a lot of people, I think we do that, and let me know what you think, but I think we do that because we're always, like you said, like we want to make it back. We feel like we need to make money. We're down a certain amount. But then if we really focus on what you said earlier, if, we just need to wait for the right opportunity and so forth, it's more focusing on this game of trading as an actual game of process and execution. Like if this is a game of execution, like if we can focus on executing the right price at the right, right exit, right entry, then, and if you just celebrate it how you execute it, whether you got stopped out, right? You executed it well, then maybe we do a lot better, right? That's like one way to eliminate that habit of like, oh no, I did well because I executed this trade perfectly.
Right. And there's no doubt about that. That's absolutely right. I mean, there's times where, there's a lot of times where you take a loss. That doesn't mean you did something wrong. I mean, the market's tricky. There's a lot of times where I feel like I entered a stock at the right time and I had patience, and guess what? There's, maybe an algorithm in there supporting it underneath that I can't see, and that, that jams it higher. And I think it's not always about, a mistake on your part per se. There's a lot of outside forces that, they're driving the market. But I think, again, it's even if you don't make a mistake on your entry, it's don't make a mistake being stubborn, I think is one of the biggest things. And don't make another mistake, not exiting a stock.
So speaking of that, not exiting a stock, what about like the challenge of people, and let me know if you have experience with this, where there's some traders who have that challenge of I enter a trade and I get out before either my risk or my profit is hit, and then they get frustrated. Like, what's a way that someone can eliminate that habit of not letting their plan out or play out?
Yeah. I think overall, one of the most important things as a trader is what I do is I have, through the years, through studying my trades, is I have my process. I have my plan, have an idea of this is what I'm looking at every day. This is the setup I'm looking at. I know through experience, this is what I'm looking to enter stock. And these are my certain rules that I have. And I don't have them written down. Some traders do. They write all their rules down. This is when I'm going to enter. This is when I'm going to exit. If it breaks support, I'm going to add. If it, whatever. I don't do that. I have them mentally. So I think it's so important to have a set of rules, whether they're in your head, whether you write them down, whether you tape them to your desk, whatever it is, and overall stick to your process. And I think if you stick to your process and either don't break your rules or break them as little as possible, I think you will be successful. And I think, again, it is very tough because we're in a market right now. We saw the market in, May, June, July, and even August. It's pretty easy. and things just worked, right? Whether you long, they worked. Whether you're short bias, they worked. And now we're getting into September, and the last few weeks it's been slow, and there's a lot of head fakes. Stocks go up like they're going to break out, and then bam, they drop. You short it, bam, they support, and then they jam back up. So you can't get frustrated with, if you stick to your process and you stick to your rules. I'm confident that in the end you'll be happy and you'll be profitable. So in these little times of either the market's slow right now, or times of, like we talked about, getting head faked out or stopped out, you can't let it get you down. You have to be mentally tough that overall my rules are going to prevail, my process is going to prevail, and I'll be successful.
Is it safe to say that, just after listening to you say all that, it made me think of the idea of, is it safe to say that most traders, maybe not everyone, okay, but a lot of traders, like during the hot times, that's the time where you should be making your money. And during the slow times, you're really just trying to stay alive and not lose what you earned during the hot times.
Preserve capital,
Yeah, and then when the hot times come back, that's how you might go up and then stagnate and up and stagnate. That's a consolidation period. Is that kind of how you visualize the market?
Oh, 100%. No doubt. I mean, if you can make money and consolidate and then make money, that's perfect. You don't want to go up and then during slow times give half of it back because you're breaking rules. It is, when the market is hot and the opportunities are out there, like we've seen so much this year.
Yes.
It's kind of hard. Well, I'm not trying to sound like a jerk, but it's been hard not to make money. I mean, the opportunities are just there daily to make money. And, even sometimes if you're breaking your rules, the opportunities were just there. Right now, I could see how you can lose money, because rules are easy to break when the opportunities aren't there and you're standing in front of your computer every day because this is your job and you do it not only for a few days, but a few weeks. It gets to the point of saying, okay, I'm going to stretch my rules or bend my rules or whatever. And, and I think, again, it's okay to break some rules. It's okay to try different strategies. It's okay to try new setups, but you can't go for a home run. You got to go for that base hit and that's it. And you got to go for that tiny loss. Cut your losses. Don't get stubborn. I think that's the most important thing out there. And, we've also seen the last few years, a lot of times when we come out of a market like this, algorithms dominated June and July, right? We're seeing stocks pre-market up 300, 400, 500%. And now they're dead. They're done. Yep. They're MIA. What we've seen a lot of times coming out of a period like this is they come back, and they can come back huge when shorts are kind of very eager to make some money. And, the stock's up 30, 40, 50%. Let me hammer it. And that's when algos can come back and say, I'm ready for you. So you really have to, be patient and, and abide by your rules and your process.
It comes with it's almost like a cycle in the market, right? It's like we get real hot and then all of a sudden we get slow. But then what happens next is out of the blue, there's like a stock like SAVA yesterday that just completely comes all the way back, squeezes everyone who's comfortable, gets all the longs excited. And then the market gets back into that hot area and then goes.
Absolutely. It's an outlier. Absolutely. And I remember the last few years, even when we've had our Vegas conference right at the beginning of October, as you could see some stocks jam so hard because we just came off a slow period, 4, 6, 8 weeks, whatever it is. And people are really eager to, especially shorts, they're eager to, jump in, all in, break their rules. And then all of a sudden that kind of opens up a new cycle in the market where, things are running again. So, but you're right. I mean, it goes back with studying your trades is studying the market cycles. When are you making money? When do you lose money? And, that all goes back to your overall process,
What's your thoughts on, and this is kind of going towards some a different direction, but I'm curious on what's your thoughts on the idea of when you're learning how to trade, at least when I learned how to trade, it was more like, hey, learn what works for you, stick to your process, stick to your plan, and don't break your plan, and then get, take your profits when you get to your plan or take your loss. But then I feel like as you evolve, at least at your level, maybe it's different now where it's like you enter trades and then you might get out before either is hit, right? And
Right.
it's because, can you explain, have you always been that way and you found success that way? Or is it like you evolved towards that direction where you'll cut before profits are hit or before a risk is hit? You know what I'm saying? Because, and then if you do that, how do you manage the difficulty of all these paper cuts? And then, because some people are going to hear you in your old episode that you interviewed
Right.
on, and they'll hear like you just took paper cut, paper cut, paper cut, and then you go all in when it's your right
Right.
move. Well, some
Right.
people might hear this and be like, "Well, I'll just keep taking paper cuts," and then they'll end up losing a lot more, and then they'll end up trying to size in, and then it's not the right time, right? And then it goes against them even more. So, like, how do you deal with that? Like, what's your mindset? Or your process of figuring out, like, okay, like, how do you do that? I'm very curious.
Right. So, it's tough. And when I say I take paper cuts, paper cuts, paper cuts, that's definitely not daily. I definitely don't enter stocks daily, short it and then get out, and short it and get out, short it and get out. I think I take a lot of paper cuts, I would say, on my biggest winners. The biggest winners of the year, something like like GNUS, for example, or the massive runners that we have over the last 5-10 years. I have a whole book of all their previous charts, but any stock that'll go from 5 to 30 or 10 to 50, whatever it is, and I try to ride those back down. Those biggest winners for me, I always take the most paper cuts on because they're always on the most overextended charts. And I those are mostly swing trades, and I enter them early. And the reason I can do that is because I know through history and through studying that those are going to pay off. I just know it. Now on an intraday basis, so if I'm just trying to short something intraday, I usually, if I've lost on a stock twice, usually I'm done. Maybe three times would be max. So it's definitely not something I do a lot because psychologically it's tough. There's no doubt about it. And, one of the things I do is, again, through studying my trades in the last several years, but I really look at how did a stock similar to this react in the last week or 2 weeks? We talked about MRNS today.
Yes.
And it had huge volume. And it kind of held. And yesterday it reminded me of VXRT. And, VXRT squeezed really hard, decent. And it had big volume. So I actually longed MRNS a little bit today. But I look at, whenever stock is running or whenever stock is moving, I want to look at what ran similar to this in the last couple days, the last couple weeks, maybe the last month. And how did that stock trade? How did it react? What was its volume pre-market? What was the news? What is the float? And how is that stock trading today? And I use that a lot to help me with how I trade it. With my mentality of, do I want to short this early? Because do I want to short it early? Do I want to wait till the last hour of the day? We've seen periods of time, and I'm not trying to get off course. We've seen periods of time where I'll go jam stocks all day, and then they just let it crash in the last hour. And we'll go through periods of that. We'll see 3 in a week. We see periods where, and I'll go jam the stock the first 30 minutes to an hour, and then they just let it crash. So as part of my overall process of, again, not trying to take too many paper cuts, is I try to be patient enough that my entry is perfect if I can, which doesn't exist. Perfect entries never exist, but I try to make sure it's right. I don't simply just click the short button, see what happens. If I'm wrong, I get out. I don't do that. I try to have enough analysis and data out there that my, entry is good enough that hopefully it works, and hopefully I can add to that.
When you
it's definitely not something you want to do. Oh, sorry, go ahead.
No, go ahead and finish now.
Well, I was going to say, it's something, again, taking paper cut trades, it's definitely the way to go, in my opinion, where you never have a big loss, but it's not something you want to do daily. Enter too early and just take losses, and then hope for the big win, because it is tough. It is mentally tough, like we talked about, to take those losses because it can be hard to regroup. But again, on a big A+ setup where I'm going to hold it, a couple days or a week or so, where I know I have very full confidence that I'm going to be, green on the stock, make a lot of money, I have no problem doing that. But intraday, it's definitely a lot tougher, to do that.
That makes sense. So basically, the ones that have the highest odds, obviously, the ones
Yeah,
that you're willing to take a lot of paper cuts because the
right.
payout's always better.
The risk reward's a lot higher. Yes.
Right. And so like, but then it makes me think, but the other side of the coin of if you don't take all those paper cuts and then you take your entry at the right time, then your reward's a lot better. You know what I'm saying? Like, so it's like,
Right.
because you're taking paper cut for paper cut. So eventually that becomes 1R, 2R, 3R, 4R. And then you take
Right.
an 8R gain. Well,
Yeah.
you could have had, you see what I'm
Yeah.
saying? So like, do you just accept that or have you
Well,
like,
again, I think, what I try to do daily is perfect your entry. And that's what I try to do daily is study other trades, whether they're mine or whether they're other setups in the market. I do a lot of that studying other setups in the market where I try to perfect my entry. So when you can do that, um, you take a lot less paper cut loss because you don't need to get out. So it's about being patient enough to make sure your entry is good. You don't want to blindly enter a stock and say, I hope it works. And if it doesn't, well, I'll just get out. Because, small losses, they add up. And there's no doubt about it. Small losses can add up and they add up quick. The reason for taking the small losses is that so you don't take that massive loss that ends your trading career. But I definitely don't, condone or encourage, entering a stock without real conviction that it's the perfect time.
makes sense? Because you also said you briefly said something about a book that you have of stocks or whatever. Can you explain what you mean?
Yeah, so I started really making a collection, and I've gotten a little lazy the last couple of years with school and kids and schedules, but I have a list of huge market squeezers the last would be 10 years, just, even HMNY and Riot, RIOT and, GNUS. And there's, I've got 100 of them of every year, maybe the 10 biggest, 5, 10, whatever it is, biggest squeezes out there. And these are all multi-day moves. It's not just a one-day move. These are all multi-day moves. And I have the beginning chart of how they go all the way up. And then I have a second page chart of how they come basically when they crack and come all the way back down. And I study those. And, what I've seen is that history repeats itself and these patterns repeat themselves. And it gives me the conviction on, these A+ setups to say, okay, I can short this with size. I can take, the paper cut losses if I need to, because I know in the end I'm going to make money and hopefully make a lot of money.
Yep.
And it gives me conviction to stay in the trade, pay short interest, and hold it, a week or, a couple weeks if I need to, because I know, the trade's going to play out well. And again, it goes back to, studying your trades and analyzing your trades. It's just keeping a folder of the best setups out there. And you'll find if you start doing that, 20, 30 setups a year, whatever it is, next year, you're going to have chart patterns that look the same. You're going to have the same setups out there. Now, year to year, it's different. Every year, trading year is different. But I've been keeping this folder now for at least 10 years, and I've got a lot of, great setups and great, it's great research to go back to. So when you see a squeezer in the market, something that's ran 3 days, 5 days, 10 days, 15 days, I kind of go back, flip through my old charts and say, yeah, this stock did this, something similar back in the day. And I think there's a chance it might trade, similar, right?
That's smart. And is it just curious, because I know people are going to blow me up if I don't ask this question. But it's a good question, I think. Is it just the daily, or is it all just different time frames that you're taking pictures of so you can go back and look at it?
Well, it's a daily chart. I use big charts for my charting service, my daily, monthly chart, but it's it's the daily chart. And I'll have like a 2 to 3 month, range of the whole move on the way up, the whole move on the way down. And, it's fun for me, but it's fun for me at the end of the year to say, hey, I made that much money on that stock, and I made that much money on that stock, and I made that much money on that stock. Or, this stock, I entered it way too early. I had FOMO. I was stubborn. So the next one that comes up, I'm not going to do that. And that's what, when we originally talked today of how to eliminate mistakes, that's one of the great things about that is when I can keep a folder of these big setups. Because again, for me, right now in September, we're not in a market you're gonna make a killing and be rich. You're not. We're in a scalping market. But for me, my year is going to be determined on my top 20 to 30 wins, right? So I try to maximize those setups, and I try to maximize them the best I can. So I love going back and studying them and just looking at them because, they're just fun for me and they're interesting. And I think you can always learn, how to
be better.
To hopefully perfect. Yeah, just be better. Absolutely. No doubt. Yep.
That's awesome. That's awesome. So so you're saying maybe 20 or 10 trades out the year really make your year?
In equities, yeah, I would say, I don't know if it makes my year, that might be a stretch, because this, even May, June, July, it was just every day you were hitting something really good. So this year is an outlier, I would say. I would say on other years, a few years ago, like I talked about Riot and HMNY, both that ran from, I'm going to say, a pre-split price of 5 all the way up to 40s. And I swung those short with size from 40s all the way down to, the teens. And, those stocks definitely made my year, those couple trades. And we've seen that almost every year. These kind of, I'm not saying they're all pump and dumps, but, a lot of them are. They get, now it's Robin Hooders, right? They get Robin Hooders behind them and they get overly inflated, and I write them all the way back down. So this year, it's not going to be 10 or 20 stocks that make my year. But in the past 10 years, I'd say there's a good chance that, a handful of big wins always make a big chunk of my year. It's not day to day trying to make a few thousand here and a few thousand there. It's seeing these big overextended setups, sizing in, and writing them back down is what usually does it for me.
Cool. Well, look, Phil, I appreciate you being here today and helping helping others out there with your insight and what you were able to share with me today. So if there's anyone who might want to know more about you, what is the best way for them to reach out to you or at least find you?
Go to my Twitter. It's now just my name, Phil Goedeker. 1 is my Twitter handle. And I have some, I don't tweet as much as I'd like. I should get off my lazy butt and tweet a little bit more, but all of my, info's right on there on Twitter.
Perfect. And I'll put that in the show notes for everyone who's curious. But other than that, thanks so much, Phil, for being here today, my man.
Thanks, Alex. I enjoyed it again. I'm looking forward to doing it again in the future.